Dann kommt der Steffen Wagner nochmal, den wir heute schon mal gehört haben. Dieses Mal geht es um Traditional Venture Funding versus Crowdfunding.
Thanks. Yeah, thanks for listening to me a second time. I'll switch to English since I learned that there are a few guys in here who would appreciate if the language was English, and nobody left the one, or the two actually, presentations that were in English, so I guess that's fine for you guys. I'll present Investiere, which is kind of it's definitely a new finance concept, but I don't like to call it a crowdfunding concept, despite the fact that it has lots of crowdfunding elements. But it's a venture capital game we're operating in, and professionalism makes a lot of sense. And we think that a product can only be, or a service can only be successful if we combine new elements with proven practices, and if the whole model in general is sustainable. But you'll see how that works. I call it a social proof direct investment platform focused on early stage. Just to give you a quick snapshot on Investiere. By now, we are the largest private investor network in Switzerland that's operating in the early stage space, a privately held Swiss AG. Established in 2009 conceptually, and we launched the first financing rounds in 2010. February. 7 employees based in Zug, but most operations centered in Zurich. And we have just opened an office in Geneva. And if you're interested, or if you're Roman, talk to Julien, who is leading that office. Yeah, we learned about regulatory challenges in that space. Thanks, Oliver, for that. As another platform, C-Crowd, that we later get to know, has achieved, we also obtained a FINMA ruling on the model that we're running, and we're SECA member and CTI Invest member. 2,000 investors on the platform. Investors and entrepreneurs, sorry, it's about 1,500 investors and 500 entrepreneurs, 12 startups financed as of today. If you're interested in which ones, just visit the website. It's all there, very transparent, the numbers, the figures if you're interested. In total, we contributed 4 million in Swiss francs to rounds that totaled to 14 million if you would add all up. As you can see, the minimum investment is not very small tickety, if you wish. The minimum usually is 6,000, sometimes 10,000 per investor and per startup. But since we also, we're happy to say that we also won some family offices that are very entrepreneurially minded, and obviously those guys, and we had one case, can invest and usually invest much more, in one case 500K. Who has heard about Investiere? Let me ask that in here. Okay, most of you guys. That's fine. That's great even, because I don't want to bother you with too much on Investiere if you already know a bit how that works, a little bit, 3 slides, I guess. I much rather want to put our model in context, because I think depending on the phase you're operating, different models make sense. If you want to create value in venture capital, you need to have the right model for the right goal or the right game you're playing in. You'll see what I mean by that. And I'll start with that, then I give you a bit of more detail about Investiere, and then we look at social proof aspects, because that's the key point about it. Most of you probably have seen a slide like this. It shows the typical life cycle of a startup company and the typical players operating in these spaces. And Investiere is an equity gap player, and what I mean by that is that in OECD countries, and that's the same everywhere, it's and that's also appreciated by OECD studies, the equity gap is the biggest in the early stage. So we're not talking about rounds of for seed money to get to your first business plan. We're not talking about startups that are still in an incubation phase, but really those with a proof of concept or a proof of market. And that's usually the space where the traditional business angels are involved, like BAS, as we've heard from Jan before. There are not too many, and this gap is quite big, and there's lots of room to improve things compared to what they used to be. It's typically a Series A or B, so not a seed financing, as I said. We do follow up rounds, sometimes even a Series C in certain circumstances. And what's important is that VC funds, to understand, is that VC funds, although they're called venture capital funds, they are not so venture-y. I mean, the term implies a certain risk, and despite the fact that one would assume that they would invest in that space, they rarely do. In Switzerland, there are one or two who do perhaps 1 to 3 deals a year, but that's clearly not their game. Why? Because of transaction costs and a number of really challenging problems that one has to solve in that space. Let me move on. So before I talk more about Investiere, we're operating, as I said, in the early stage. I think if you want to create value in the seed stage, then you need to come up with an incubator model, an accelerator model, a model, as we've heard a few examples from the States and also Switzerland. It's very important because it's the trial and error phase, and nobody has the perfect business plan at that stage. They haven't shown traction, so they need to test stuff. They need to be connected. They need network. They need really heavy-duty coaching, infrastructure, co-working spaces. But most importantly, I think I'm coming back to the Founder Institute example. It's important to have serial entrepreneurs involved in that stage, that work with you guys. And if you only put money in startups in that phase without having that context, it doesn't make sense. Friends, family, and founders are important, of course. They play the key role there. But I think it's not very feasible to play in that space. You could combine small-ticket crowdfunding with this stage, but only if you closely collaborate with these schemes that make sure that something useful is coming out. So in the typical angel space, the early stage financing rounds between 500,000 and 3 million, we think that network models, platform models make most sense. Why? Because like with funds, I'll talk about that later, you need some diversification. And there's a clear trend, if I talk to VCs, private bankers, away from fund models. And to achieve that, there's a clear trend to go towards direct investments. Why? Because people, with all the experiences they made, financial crisis, etc., they want to cut out the middleman. They're not open anymore to pay horrendous management fees. And so the one solution that we see is have a platform that brings together different types of investors. So mainly private investors, because typically it makes sense, but the right ones. You need to have a platform that introduces deals to a wide range of investors, and then see, with just a teaser, web-based, and then see who is interested, because that's the interesting point. With the 12 rounds we saw, it's amazing what kind of investors come together. Because if you show something in a nanotech space, like a measurement instrument, you will find people who have that background within that investor space, and you will only attract those and talk to those, and bring those together that have a clear benefit and knowledge and industry experience that they can bring in. That's why traditional angel clubs usually are not the best fit for every startup in that space, because they are the same 30 or 60 or how many members that think that they are the best board members for any startup they invest in. And that's true in many cases, luckily, and we have some very skilled angels in Switzerland, but it's simply a bit old-fashioned. So marketing and sales reach is key. That's also clear. So by having a wider investment base, you can use these multiplication effects of a wider investment base. Growth, I'll not talk about this right now, but you can take the slides back home and read that. Don't try to read the next slide because there's too much text on it, and again, take the text home. But what I was trying to do is show the game of early stage investment based on a comparison between let's assume a managed fund concept and what Investiere does. And I'll just go top to bottom and just listen to me, because you can take it home, as I said. First, I'll go through the chronology of a typical life cycle of venture capital investment. For deal sourcing, a classical VC would use deal sourcing software. I don't know how many of you know Gust and things like that, that give you thousands of business plans and proposals. But it's not about quality, we think. Obviously, they receive lots of business plans from desperate entrepreneurs who want to try everything, and then they do their selection. But the mentality is really increase the funnel and then think that, or hope that if you have a big funnel then, and you are very selective, you pick the best stuff. We think that's also, that's a bit old-fashioned too. Finance 2.0, and that's what I would call it here in comparison, would leverage a broad community. On Investiere, you have numerous entrepreneurs, you have industry experts, you have private investors that are also a deal source, and you have crowd voting. You could go to Investiere today, this evening, and enter any company that you think is interesting, and it will be on the radar. I'll show you later how that works. And then a certain maturation can happen. You use a bit the crowd to, not to select the deal, but in the very first stage to make sure that you have everything on the ecosystem that's potentially attractive, and then see how mature they are, how much traction they get, followers, voting, etc. And then you have a better idea on what you probably should look at. Investment decision, same thing. You don't have a static investment committee like usually VC funds have, like 3 or 4 people that are the same all the time and think that they do great decisions. They usually have impressive track records. They will show you that they have done lots of great deals in the past, and that's great for them. But there's a bias, of course, because you're only looking back. And usually once they were lucky with their first deals, sometimes they simply have the funds after their first exit to invest a lot. And then it's a matter of statistics also that they can show additional track record, which is all fine. I'm not saying that those guys are not offering value. We also work with VC experts and people who have exit experience. But it's not the perfect model. And as I will also show you, if they take the board seats on every investment they do, we simply don't think that the same guys are the best board members for every startup. So instead, you put various level of additional social proof. In our case, and that's probably a bit surprising to you, we do involve an industry expert right at the beginning. Before we even look at a deal, we just simply look at what niche does this specific startup play in. And then we show this to an industry expert. And this guy needs very little information. He will look at the ecosystem, who you're connected to, what your product is about. Since he knows how to sell that, he knows the distribution, sales channels, he knows the exit candidates, he can quickly, very quickly, give us a thumbs up or thumbs down if it's worth going ahead. And if you have sufficient, obviously then you need the VC experience, because industry experience is one thing, you need the VC experience, and that is today still done a lot by ourselves. And then once you launch it on the platform, you want to make sure that even in the investment phase, you have social proof. How? Well, if you look at what happens, you want to see that there are some friends and family commitments. Because if there are no friends and family commitments, something must be wrong. There must be someone in the person's network that puts money. So you wait. It's fine to wait a little. And you also want to see who is coming on board as interested investors. So you want to make that transparent. You want to show that certain serial entrepreneurs have invested, for example, that ZKB is co-investing, whatever. And then you probably are more likely to have a broader-based due diligence that's part of their decision to make an interest or commitment for an investment. Syndication, again, there's this mentality for funds that you can go alone, but very often they do syndicate with 1 or 2 others. But again, that is not the right model from our point of view, because the entrepreneur much rather should go for a divide and conquer and have the right investors and diverse investors than a few that really can cause problems. So it's very typical also for Investiere, as you will see, that we have these different types of investors in our rounds. So we are mainly a private investor platform, but lots of angels that are members of traditional angel clubs are also members on our platform and are co-investing. We have ZKB a number of times as co-investors in many others. And there's a win-win from bringing together these different types of investors. Fee model is a 2 plus 20. I don't bother you with that in the management fund model. And usually when you do the direct investment platform, you just take a commission on the actual deal volume. And that's with respect to the equity upside, which you should take because that's why you want to be in game. If you want to be for profit, as Matthias said, then that's much more attractive than the 20% that on your exit that the funds would usually take from you. And post-deal, last not least, that is so important. It's not we're not a pure funding platform in a sense that we don't care about what happens then. The most important challenge, and probably the bigger challenge, and we'll continue to work on that, is what happens after an investment round. You want to make sure that your investors have standardized reporting. You want to make sure that the right investors take board seats, not just because the person A is free as investment manager to take the board seat. And it's amazing, I'll show you with an example, what candidates you can find to make sure that you can ensure the quality of that startup until the exit. As I said, now 3 slides on Investiere. We do lots of things. We help facilitating deal sourcing and deal flow. We help the deal presentation to make the deal presentation really crunchy. We use a movie because trust and people is the #1 aspect of venture capital investment. So you want to give at least a first impression on these people that do the business. And we do the whole structuring of the deal usually with partner lawyers that we work with, and we organize meetings, etc., to make sure that the transactions that are usually handled by a workflow tool that is also on the platform are really going smoothly until the very end. Very important is that you don't reinvent the wheel. We work with SECA standards, and that's also very important. I'm in close contact with Julien also, who is our lawyer in the team, with the working group of SECA, and we're giving them feedback on what works in early stage, what not. Usually the SECA is a bit more later stage and institutional driven, so it's important to do that. But don't reinvent the wheel, because it should be take it or leave it for private investors that are small. It is obviously an option to negotiate a bid deals if investors are bigger. And then, as I said, post-deal management is absolutely crucial for success if you want to build a sustainable crowdfunding or venture capital model. That's a bit a glimpse on our network. How am I in terms of time? I should be finished. Okay, so think of Investiere as having a core team, have a broad shareholder base, because we preach what we teach. We part of our own funding went the same way that we suggest to our entrepreneurs. We have our platform members, and then there are numbers of associations that we work with. There's Jenny Lim, for example, of Baumgartner is there if you want to talk to him. Very good, doing a very great job in that space. And obviously we have close relationships with a number of co-investors because we think they are very important too, and we want to involve them. I'll be quick on this one, just to give you a feeling, deal sourcing, how that works. It's amazing to see how important entrepreneurs are, because entrepreneurs know other entrepreneurs, and we much rather work with deals that are pre-recommended by a trusted entrepreneur, and that's what brings the most interesting deal flow for us. And as I said, software like Gust is not so important for us. And our curation trick, as I mentioned before, to involve an industry specialist, we have over 50 for different niches, is very powerful, because we can bring down the yearly number of business proposals from 250 on average to 30 just within that step, without, luckily, us having to do anything. Then we do pre-assessment and due diligence, and then you co-invest. Nobody talks about fees. We do. It's very simple. We don't have management fees. Investors pay by shares. So instead of giving us cash, they're giving us some shares. In our model, 4.5%. versus funds at 20. Entrepreneurs pay us cash, and we will try to bring that down more and more over time, because obviously we're in the game because we believe in those companies that are pre-selected. And in return, startups get services and investors too along the whole cycle that I mentioned before. So it's a win-win model. That's a screenshot of the startup ecosystem radar that we work with. There are hundreds of Swiss companies, mainly Swiss, of course, in there. In the early stage, we involve lots of people. It's not public yet, but we involve lots of people, industry curators, shareholders, you can imagine, already today. Numbers are fake, by the way, to make sure that those deals pop up that are really interesting to look at. And you can provide comments and etc. So at some point we will open that ecosystem, and it will be interesting to see what happens then. Suggestions, as I said, can be made by anyone. And in a second step, there's perhaps one more thing that I should add to the curation stage. We believe that you can only find out about the quality of a startup team if you really work with them. So part of our due diligence is actually in an iterative mode to really work with the entrepreneurs in various meetings to discuss key aspects of their business plans, etc., etc. And we involve the curators and experts there as well. And there are various reports produced along the process that's clear. And here's an example of an investment that's currently active. It's quit.ch. You can see how we usually do that. I blacked out some names and numbers, but it's a live case. I don't want to talk about what they do, but it's interesting to see it's an ICT startup. It's interesting to see that the co-investors, the potential co-investors, because it's not yet closed, in this case, are some of the founders and CEOs of the most important, of the most successful Swiss ICT startups that we ever had. I guess some of you, just to name two of them, you're aware of Doodle, you're aware of jobs.ch, and these are the kind of guys that know how to exit a company, and if they think this company is worth investing in, you might want to do the same. That's how we work. There might also be a ZKB or whoever, but we believe in this social proof and in this herd mentality of how things work. Before I open for questions, I'll leave you. It's also important to see what others say, because I can tell you everything and promise you the blue in the sky, but as of today, I think we did a pretty good job, and every case is important to us, every investor is important to us, and talk to anyone about us and make up your own mind. We're quite proud that we had this success in a very short time, and I'm very. It would be great if many of you would come up to me and say, I want to support it. How can I help? How can we work together? Just come up to me. I'd appreciate it. That's it.
Thank you very much. Are there any questions?
Yep. Yeah, hello, thank you. Good question is, if one is investing, is the investment then fixed until the company is doing an exit, or is there also a kind of a platform where you can trade an investment?
Secondary trading, no, we don't do that. It's a great topic, and I'd love to go into that field. It would make these kind of investments, of course, much more attractive. No, we don't change the world of venture capital here. You really need to be sure that the company has a potential for exit. What we can do and might do is offer a possibility to at least sell shares to your co-investors. So we can facilitate that. And having a broader base of investors, it's also quite a realistic, comparably realistic scenario that might even happen. But the regulatory issues are a nightmare in that space. We looked at it, it's terrible. There are platforms like SharesPost and Second Market in the US, I guess you know those guys. They're doing good job, but I don't want to do that business here right now.
Any more questions? Yep.
Why was it that you said you're not a crowdfunding platform? What's the rationale for that?
There are two reasons.
Specifically, just one, because you're not using your private investors, for example, for due diligence, or to me they seem to play a more passive role, or it's not clear how they are playing a more active role to me.
Well, for a number of reasons. First of all, it's not only the crowd that invests. And the crowd, because they invest along other professional investors. And the ticket size is at least significant. If you invest 10,000 Swisses, I guess you do have more ownership and feel more responsible and active for that investment than if you invest 300 Swiss francs. We want to have entrepreneurially motivated investors and not gamblers, let's say. And as I said, the third aspect is that the perception by professionals about crowdfunding is also not the best. Rightfully so, because if wrongly done, you can destroy more value for any party involved than create. So, and we do involve a number of practices for due diligence, financial, legal, that are traditional venture capital and are not, and we don't leave it completely up to the crowd to decide what they want to do. So we bring a lot of quality assurance in there. But there's no commonly agreed definition, of course, of what crowdfunding is, and I'm happy if someone wants to put us in that box. That's fine, but they should have a close look at the model because they differ quite a lot.
Okay, thank you very much. I think that's all.